All right. The long anticipated for whoever wants to learn for free. I mean, I learned for free as well, but I did join a mentorship. I'm going to give out everything I learned from that mentorship. It was decently priced, good knowledge, good worth, but everything you need to learn is free on the internet. And trust me, I know. Today is going to mark the first episode, the beginning of the camp and 2K trades camp. All right, you want to become an elite trader? You want to become a G? I'm going to teach you how. And we're going to start from the extreme fundamentals. None of this shit matters. You're not going to learn how to read this. You're not going to learn how this goes from this to comes down here, no one to buy, come up here. You're not going to know that until the end. But you will know. I'm telling you that right now. You will know why. But not today. Today, we're going to get started. And typically the most important product of trading, I'd say. I mean, it's not the most important, but it's everywhere in trade. So I guess you could say it is. This is my gray box. Today, we will be talking about candlesticks, the most boring topic we could talk about, but it's essential. Anyway, candlesticks are what every single one of these things are. And now if you look over here on my chart over here on the left side, it shows 1 minute, it shows 3 minute, 5 minute, 15 minute, 30, 45, 1 hour, 2 hour, 3 hour. It shows all these time frames. It even shows 12 months, right? So let me explain what that means. This will represent a candlestick. All right. Let's make this one green. Right? Obviously. Green for up. All right. Let's make a little wiki. And I'm going to explain what this means. Because we're starting from the basics. And we're going to explain a red candle, which is a down candle. And what this means. All right. So, let's start from the fundamentals. This is a up candle. Now, these two things represent completely different. This would be the opening price. Now, where you see where this body starts, this is the opening price of where that body started. And this is the closing price. So this candle pushed up, closed here. Now you're probably wondering, what is this little wick? So this wick means that the candle opened up here. It pushed all the way up to here, right? So at one point, the candle was looking like this, let's say. And then as time went on before the candle closed, it ended up falling down and it closed there, let's say. So this was like for example, it's like a shit trail. You ever taken a shit and, like you just take a hot steamy shit and you buy a new pair of white underwears and you don't wipe your ass. You just pull up your underwear and, after it's been a minute, after that shit, you look back and you're like, what the fuck? I shitted like 5 minutes ago, but I got a little shit trail. And that's what this is, right? So, for example, it could have opened up here, pushed down, looked as a red candle, as a down candle first, and then ended up just being bullish, going all the way back up, pushing up to here, but then closing here. So this is the shit trail. Now this, it's inverted. this is the closing price. And this is the opening price. And same thing with the shit trails. It could have opened up here, been bullish, been green. Bullish, when I say bullish means bull, so running, strong upwards. And bearish means bear, bearish, going down. So it's either bullish up or bearish down. Just so I could describe that. So this was the opening price here, and this is the closing price. So it could have opened up here, came all the way down to create its shit trail, and then it was like, it could have even came down to here, boom, created a shit trail all the way down to there. Because sometimes there are shit trails like this. Let me give you an example. Right here, boom. Look at it. This candle opened here, but it came all the way down to here within the 4-hour range, and then pushed all the way back up. That's what I call a shit trail. Happens. It's important to know these, though. Very important, actually, about the shit trails. They're called wicks, though. But anyway, so now that you understand opening price, it's just inverted. Look, opening price down here because it comes up. Opening price over here because it comes down. Shit trail, shit trail. Anyway, I'm going to teach you about what do these mean and how to read them. So now you understand the meaning behind each candle, the bearish and the bullish candle. And sometimes the candle could look like this, to where you can't even barely see the color, but sometimes it will look like this. Let me give you an example. Sometimes the candle could look like this. Yeah, it shows that it's green, so it's pushing towards the upside. But this candle is called a doji. Let me see. Let's see. Let me look up a bullshit candlestick. Hold on. Can you see this? Candlestick cheat sheet. All right. Right here, boom. I don't care about. Let me zoom in. Alright, whatever. It's just zooming out. Anyway, I don't care about this, any of this bullshit. None of this. All this is garbage. If you ever see these Instagram bullshits, it's bullshit. They don't fucking know. This shit doesn't mean nothing. None of this means anything. None of this. None of this. This is all I care about. This doji, long leg doji, same shit. Yeah, these are all relatively the same shit. But the dojis is what matters. The hammers, whatever. That all matters, right? And the reason that matters is because every time before you see a reversal, for example, right? And these are 4-hour candles. So let me just explain this. You got a 1 minute, you got a 3 minute, you got a 5 minute. And what this means is that, let's go down to the 1 minute. Every 1 minute candle, like if I'm on the 1 minute time frame, right? Where the hell's the candles at? Oh, there they are. All right. My God. If I'm on a 1 minute, that means if you look at the time on the bottom of the screen down here, right down here, every candle represents 1 minute of time in the market. Setup, boom, inversion, boom, long john, bomb, that shit all the way up. Anyway, this is funny. Sorry, I was looking at this, but okay, let me stay on task. Let me be a professional because I'm all about professionalism. All right, ready? Boom. We're in the 4-hour chart. So each one represents 4 hours. 4 a.m., 8 a.m., whatever. So now if you notice, every time before a reversal, look, this is 8 hours of downtrend. Ready? Boom. 8 hours. That's 2 candles, so that's 4 hours. And now look, what do you got here? A doji. You got this long shit snail trail. And you got this one. So this indicates that the price is kind of undecisive. Like, it's very indecisive, the price. And so it usually, when there's a doji, it leads to a reversal. For example, right here. Hold on. All right. For example, got one right here, right? So look, this is huge bearishness. This is 4 hours. 1, 2, 3, 4, 5, 6, 7. 7 times 4, that's 28 hours of just straight up black, straight up down candles. And now you see it comes up a little bit, creates this doji, as you can see, and then the price reverses. Now there's a million other confluences, whatever. But as you can see, the doji candle represents a price indecision. Let's find another one, for example. All right. Usually you could find dojis in either reversals, or you could find them in, like, let me see. I know there was a, like, the main reason, something crazy. The main reason why. Okay, so for example, now we're on the daily time frame. So each candle represents 1 day of time. So as you could see, boom, we're bullish. We get a doji here. As you can see right here, this is a doji. And what does price do? It changes direction. Your bull, doji, right there, changes direction. And then you get like a low doji, but I wouldn't really say that's a doji. This would be considered a perfect doji right here. Boom. You see how you barely see this candlestick, like the fat part of it, the meat, the open and close of it. You can't even tell what's going on there. But as you could see, it's bare, it's going down, and then you get this little fucking indecisive dumb candle, and it completely reverses. Now that's what dojis really represent. For example, right here, if we got a chop, have a doji, price goes down. Chop, doji, price goes up. You could just see price comes down, you get a doji, price goes up. You get another doji, then price reverses back down. So dojis just represent like indecision in the market. Very indecisive here. Like I said, this is a consolidation. This is almost 1, 2, 3, 4, 5, 6. It's an over a weekly consolidation because this is every candle represents 1 day. But as you can see, there's 1, 2, 3, 4, 5, 6 or 7 dojis in the daily. So as you can see, this was a big accumulation. Anyway, sorry, let me not get ahead of myself. That's way further. But as I'm saying, you could see what it leads to, right? And I'm gonna show you how to understand that. Anyway, what else do I want to get involved in with the candlesticks? Because it's pretty much straightforward. You guys understand that it's up candles, down candles, open, close. We could get into the wicks, right? Okay, perfect. So this wick right here, this means that this actually pushed all the way up, right? But it pushed all the way up, and by the end of the day, it ended up coming back down and closing. So at one point within this day, this daily range, this candlestick actually looked like this. It wasn't red for sure. It was blue, right? Let's say this was like the candlestick. It actually looked like this at one point, right? Disregard this wick. It just came all the way up. And then towards the end, it started coming back down, coming back down, coming back down. What this represents is that usually these long wicks here show that it's hunting out something. Now we're going to get into liquidity and we're going to get into that later on. But these long wicks are very important. You have to pay attention to them. And you have to mark them out. And I'll explain why in another episode or whatever, another video. But make sure when you see long wicks, be careful. This is what you want to fucking trade, right? These big, nice, thick, muscular candles. Those are nice candles. And yeah, I mean, candlesticks are pretty straightforward. But, you know, just remember the doji candles. Remember how the candle works with open and close, and pay attention to the wicks of them. Extremely important, these wicks. For example, we're now in the weekly time frame. I switched it. So each candle is 1 week. As you can see, when it's thick like this, you can see how, oh my God, this is, by the way, this is COVID. So, boom. COVID. Pandemic. Fucking fake garbage. You know. Propaganda. Oh, wait. I don't. Hopefully my account doesn't get banned, actually. Anyway. Whatever. We all know what it was. Boom. Tanked. I mean, yo. It tanked. And then look. You get your little doji. And it's like, don't worry. I know where we're going. You see this doji? Price was deeply trending down. Who's going to know when it's reversing? This little indecision in price. You see the doji, then you, from watching this, you're like, wait a minute. He was talking about something how when that happens, the price is usually a reversal where there's just indecision. Right? So it could have very well been. And it closed bullish a little bit. It closed blue. So, I mean, it reversed after that. Continued for weeks. For weeks, just a straight bull run. And, you know, we had to get some other orders in, let's just say. But I think that's going to close it out for candlesticks. Very straightforward. Next one's going to be more impactful. Peace out.